Just want to say a few words of thanks firstly. Obviously to everybody in the room for joining us today, and to all of our sponsors and event partners and our hosts. I'll come on to some of that in a second. Just want to kind of quickly sort of say as well at the start that we have quite acutely felt some of these dropouts in our speaker lineup today. I'll touch upon this when I talk about Fintech North, but we're all about championing diversity in the sector where we can, both sort of a gender perspective and also, championing underrepresented founders. And we're acutely feeling that a little bit today. So I just want to kind of highlight that and address that and say that, we already struggle a little bit with diversity in this sector up here in the North especially. And today we're feeling that even more as well because of some of the disruption. So just wanted to say that that's not ideal. And with all of our major conferences, we try and address things like female entrepreneurship, racial diversity in tech, and we'll continue to do so. So I just wanted to sort of make that declaration and that statement at the start of today's event. I'm Joe Roche, I'm Engagement Manager at Fintech North. I just wanted to spend a couple of minutes, no more, to just sort of talk about our organisation, who we are and what we do, and say a few words of thanks to some of our fantastic partners for making today happen. In particular, Discover. Discover are a US-based payment network. Nick and Trib have been fantastic supporters of this event and have stuck with us through thick and thin. So I just want to thank them for making this happen. Bruntwood, our fantastic hosts today as well in this wonderful facility at number 1 Circle Square. There's some great tech companies based here, so what a place to talk about payments here in Manchester. MBA as well for supporting last night's pre-conference dinner. Again, Asha, thank you so much for all of your help. That was fantastic last night. And thanks for your support of the conference. And of course, our colleagues at the CBI as well. They've helped contribute to the conference. They've actually sent a pre-recorded address as Megan was unable to make the event itself, and they've helped sort of promote it to some of their membership as well. So thanks to all of our partners here. Just a quick one for anybody who's unfamiliar with our community here at Fintech North. You can follow us on LinkedIn and on Twitter. Stay up to date with all the developments across Northern Fintech, and our agenda's on our website as well if you want to check that out, and we'll pin it to the top of our Twitter as well if people want to find out exactly what's going on today. Fintech North, who are we, what do we do? Primarily we're here to bring together the Northern Fintech ecosystem here in the North. We're here to develop the fintech sector in the North, so that involves helping our entrepreneurs and helping our scale-ups with profile opportunities, with business development opportunities through our network and through our events. We're here to also align that development with what's going on a national stage as well, so make sure that it's not just happening in silos, make sure that what's going on across the North is connected in with what's going on across the UK. And finally, we're here to promote the North as a centre of excellence in fintech, and that involves working with international colleagues across the Department for International Trade, for example, and we're actually pleased to have a visiting fintech from Poland with us here today presenting. So we're trying to kind of showcase the North as an internationally recognised centre of excellence in fintech. This graphic brings some of that to life a little bit. Some of that's quite big picture. How do we achieve that? It's primarily through events, bringing people together in the North to talk about fintech, to shine a light on regional innovation, to champion diversity in the sector where we can, and generally provide a platform to discuss hot topics. It could be specific things like payments or smart analytics and machine learning, or it could be something like ethical fintech, financial inclusion, anything and everything that the community are interested in, basically. Just want to give a shout out to some of our fantastic partners as well, especially over the last sort of 18 months to 2 years. We've had to pivot the business at Fintech North. We were unable to bring people together physically. So we came up with a series of partnership packages for organisations to come on board and support us. And you've got everybody from global FS providers right through to Northern Fintech startups in there. And Fintech North can add value to organisations of all shapes and sizes, basically. Just a really quick one, because I don't want to take up too much time. I want to press on if we can, but just to give you a quick flavour of what fintech looks like in the North and what that landscape looks like. Let's go from west to east, obviously, given where we are today. Firstly, over in Liverpool, we see a bit of a specialism in wealth management propositions in Liverpool. Here in Manchester and Greater Manchester, there's a real specialism in payments and e-commerce. Interestingly linked, I think, to the city's heritage as a centre of textiles, which I find quite interesting. Over the Pennines in Leeds, there's a real specialism in banking and lending propositions. And up in the northeast, we're seeing a real emerging specialism in payments, actually. A bit of an innovation corridor between Durham and Newcastle, which was recognised recently as part of the Khalifa Review into UK FinTech. Normally I can go into a lot more detail on that, but I kind of wanted to push through today and just get through some of those bits and hand over to some of our other speakers. But I hope you have a fantastic day. Thanks so much for making the effort and joining us here. I'm going to hand over to my director shortly, Julian. He's going to say a few words, and we've got a pre-recorded address from our chairman, Chris Sear. But yeah, I'm going to be about and trying to help facilitate today. So yeah, thanks so much, and hope you enjoy what we've got in store.
Thanks, Joe. Morning, everybody. Welcome. Thanks for braving all the various challenges that have been put before us today. As Joe said, we really appreciate it. My name's Julian Wells. I'm Director at Whitecap Consulting, Director at Fintech North. Whitecap Consulting and a Fintech company called White Label Crowdfunding co-created Fintech North in 2016. And Joe's just walked you through some of the things that we've been doing since then. Always great to be over in Manchester. We sort of do the rounds of all the northern cities. Really enjoying being able to do that face to face again now. My role today is going to be introducing the speakers, linking things together, and helping host some of the discussions. So I won't say too much now. Payments is obviously a fascinating subject, and when you look at the fintech sector overall, we've had a fantastic ride over recent years. Had a stellar growth through the pandemic. Doubling of the investment into fintech in 2021 was just phenomenal. We are heading into some tougher times now in the economy. That's starting to be felt already, I think, in fintech from the discussions that we've been having. Particularly when you talk to investors, you can see that the purse strings are having to tighten somewhat. But today's topic of payments, for a lot of organisations, this is part of the route out of recession. When you're looking to operate more efficiently, you're looking to streamline some of your processes, then some of the amazing solutions that have always been coming through in payments could be part of the answer rather than contributing to the problem. So we're going to hear from some very interesting speakers today. So our chairman, Chris Sear, is based in London. He's a massive champion for the North, as any of you will know that have met Chris, and indeed for regional fintech overall. He has pre-recorded a short address for us, so I'm going to just play that for you now. Actually, before I do, I just want to say a special thanks to everyone who's travelled from beyond the North today to be with us. There's quite a few of you that have come up from down south, and I was chatting to Adam earlier, but I know there's several of you in the room. We really appreciate it. But especially to Pavel and Peter, who've come over from Łódź in Poland, especially to be with us today. And guys, it was fantastic to catch up with you last night. We met at a fintech conference in Poland recently, and where Fintech North had the opportunity to give a presentation. So, so on to Chris's welcome address. So Chris, as well as being the chairman of Fintech North, is a Treasury Fintech envoy, and he's also a fintech entrepreneur himself.
Good morning, everyone, and welcome to Fintech North's Future of Payments conference here in Manchester. I am Chris Sear, chairman of Fintech North, and HM Treasuries, as well as your fintech envoy for the past 7 years. Now, I say here, as if to imply that I too am physically present when manifestly I'm not, and all I can do is apologise, cite the national rail strike as the reason for my lack of presence, and make the ironic observation that this conference was supposed to be the first entirely physical large conference run by Fintech North since the onset of COVID 2 years ago. What this means is that when planning the event, we assumed that no virtual element was needed as the crisis was over. However, as Ravi Burns put it, the best laid plans were mice and man, gang after glee. And here I am recording a message to kick this conference off from my home, which will be both the beginning and also the conclusion to my involvement in the day. That, of course, is unless Joe, Ryan or Julian pull a rabbit out of the hat and find a fix that will allow my continued involvement. On the bright side though, despite currently wearing a jacket and a tie, I'm also still sporting shorts, which I count as a minor win. Now, when the team were putting this conference together, I was struck by two things. The first is the enduring fintech topic of payments. As I alluded to above, I've been involved in a formal capacity in the development of fintech in the UK for several years. My informal involvement is longer still, and I can say that the initial flush of innovators in the fintech space were all focused on payments. And here we are some 15 years later, and payments is still a key topic. Indeed, my sense is that it, along with crypto assets and distributed ledgers, is the core focus for fintech and innovation, and current volatility aside, will be the focus for some time to come. Now, I say this with some insight as I have my own fintech. It's a B2B data business operating in the asset management space, and I sometimes struggle to convince my funders or even myself that I am a SaaS business and not a service business. with the important distinction being that SaaS businesses command a much higher valuation multiple than service businesses. Paytech has no such problem. Payments, and embedded finance in general are rich seams in several dimensions. Scale growth from a potential high fixed cost base, but with low variable costs, which of course makes it interesting from a VC or funder's perspective. Nurturing of highly skilled talent, portability of products, providing access to finance and financial inclusion for those willing to engage digitally, which is most people, and a rich seam of policy, regulation, and therefore regtech to sit alongside it. From what I can see, all or most of these will be discussed today. The second thing that struck me about today's event is that the topic has found a home in Manchester. To iterate, this is a single subject covered by a large event and in some detail, and in a location other than London. If this is not a clear litmus to the strength and depth of talent, interest and expertise outside of London, and specifically in the north of England, I don't know what is. So I will leave it there and wish you the very best of days. Please actively involve yourself in the day, ask lots of questions. There are no stupid questions, we all have things we can learn. And above all, enjoy yourselves. After all, most of us, at least, are meeting face to face. Let's enjoy that, as we have learned the hard way that this can change rapidly. Of course, a big thank you to our hosts and to our sponsors, but a very big thank you to you, and well done to the team of Joe, Julian, and the latest addition, Ryan, who has concluded his degree and is now with us full time. Thank you. Please enjoy the day.
Okay, well, thanks to Chris, I hope that sort of helps set the scene. As Chris kind of alluded to, we are trying to cover some of the big topics today. We're going to be talking about open banking, open finance. We're going to be talking about crypto and the metaverse. We're going to be talking about embedded finance. So and lots of other things. Regulation is going to come out as themes through the day. To set the scene and kick us off, we're really delighted to have Mike Chambers with us today. Those who don't know Mike, you will know about him after his talk today. He's a real payments guru, and if you get his Payments Unpacked emails as I do, then you'll know that he really sort of champions this sector in a really big way. Is involved in numerous businesses. I'm going to let him explain that, but Mike, come and join us at the front and kick off our event proper now that we've finished with the opening formalities. Thank you.
Good morning, everybody. I think that we've heard all the things about the post-pandemic environment, and now we're suffering an RMT train issue. So for perseverance, for getting here this morning, thank you so much. It's good to be at an in-person event. As Julian introduced me, my name is Mike Chambers, and a friend of mine called Jo, she said to me, Mike, it's not about who you were, it's about who you are. But let me just give you a bit about who I was and what I've done before to position what I'm going to share with you today. It was my privilege to run the UK's systemically important payment systems for over a decade. So I ran BACS, I've run CHAPS, I formed Faster Payments, I launched a current account switching service and ran that for the first few years of its operation. So I really cut my teeth in payments and then experienced some time running systemic important payment systems. And as much fun as that was, I'm having much more fun now in a portfolio environment. So what I'm doing in my portfolio environment is thinking about this old adage that a payment is a payment is a payment. They're all very vanilla. They go from one end to the other and sort of pop up in somebody's bank account, and dispelling that myth with the fact that the value chain of a payment is very complex, but also there's loads of opportunities in that payment chain to add value, whether you're looking at getting rid of fraud, addressing fraud, whether you're looking about adding data points within a payment going through, whether you think about the security harness that sits within a payment, whether you think about the channels that a payment needs to access and flow through. It makes it very complex but very exciting. And having been in payments a long time, there is nothing like the innovation that's going on presently. And it doesn't matter whether it's north or south. This is about innovation in the UK standing well in a global payment environment. So my current portfolio is payments with a twist. I'm going to share a few things with you today. These are some of the things I'm going to be sharing with you. I'm not going to go into detail here, but I pick each one of these themes up as I talk through. You'll notice in the corners the words digital swag. You know what it's like. You go to a conference, you take an umbrella, a pen and a notepad home and don't really do too much with them. When I get to the end of my presentation, I'm going to offer you a 3-year subscription to my newsletter, Payments Unpacked. I know there's already some readers in the room. I'll offer you a year's free subscription, which is worth 50 quid. So the price you pay for your ticket today, you can get back or double your benefit in terms of a year's free subscription. So hang in for there. There'll be a QR code and a website you can go for. But you can't talk about payments without thinking about cash. You can't think about payments without thinking about where we've come from and analog payments, in the words of notes and coins. We've had notes since about the 800 AD in China. We've had pound sterling since 1500s in Great Britain. And cash, the use of cash to buy the goods and services we consume, has been a fundamental part of the way we do business. And we have, as we transcend from an analog to a digital world, a transition that's been accelerated by COVID and reflecting a wider societal shift as well, you have to think about where we are presently with cash and what that means going forward. I'm absolutely cashless. I haven't touched a note or a coin in about 4 years. If I can't pay electronically, then I have to go without. Fortunately, these days it's very, very infrequent that I'm in that position. But there are a lot of folk in the UK that rely on cash. Now, some of it is because they need to, some of it is because they want to. And I'm very much of the school of thought that payments choice is important, but choice shouldn't just be about preserving cash for cash's sake. We should make cash available, but equally we should support folk in that journey from an analog to a digital world. So as I position my talk to you today, I've got to think about where cash is and where it's going. There are about 31 million cash transactions through ATMs a year. It's very difficult to think about how you quantify the use of cash. I use the acquisition of cash through ATMs as a good proxy. It's not perfect, but it's probably one of the best ones. 31 million transactions a year. Week on week in 2022, it's almost flat. Our habits are quite constant. Those in that cash environment are pretty flat. If I look back to 2001, it's about the same, so we haven't seen that change in 12 months. If I look back 2 years exactly, there's about 20% more cash ATM withdrawals going on. But of course, 2 years ago, we were stuck in lockdown. We couldn't go out and spend any money. If we did, it's probably over a card and we had an Amazon delivery, but we couldn't spend the cash. So you have to go back to the week before COVID and say, what were we doing as a population in the UK? What were we doing in terms of cash habits compared to now? And if you compare that week before lockdown to last week, the cash acquisition in the UK, the best proxy I can think of for use of cash, has reduced by 26%. So we've seen those 26% reduction. Those people are still buying things. They're probably buying a bit more than they did through COVID, but they're obviously doing that in a digital world. But that's presenting us three challenges in terms of the use of physical cash. The first is very much tied with the physical branch, the bank branch, the bit of bricks and mortar. We are seeing banking deserts being created in parts of the UK. And by doing that, the acquisition of cash becomes difficult for folk. So we're seeing a lot of alternative solutions. I don't know if you saw earlier in January, it sort of released to the public, but cash back without purchase, the ability to go into a convenience store, get some cash and do something with it. We're seeing independently deployed ATMs. We're seeing Link the ATM network looking at areas and working out what the solutions should be. And against that backdrop, we're seeing some legislation going through government now around the ability to access cash and spend cash. And as I said before, we've got to be careful that we don't preserve cash for cash's sake, that we actually think about encouraging people to digital solutions. And as we think through where this might land, you know, we are in a less cash society, we're in a cashless society. That divergence will become closer over time. We have to think about the role of a CBDC entering into the UK. Now, the Royal Society of Arts do not sound like the sort of organisation I would talk about today, but it's headed up by called Andy Haldane. If you know Andy, he was an executive director at the Bank of England. I know Andy, and I thought he had great paths within the old lady at Threadneedle Street. He's ducked out and pitched up at the RSA. And as part of that, we're now seeing some interesting work by the RSA. And these slides will be referenced in the output from today's session. Wherever you see a hyperlink, we'll provide the link in the notes after this conference for you to get into the data there. But the RSA did some work which talked about, actually, if you think about people using cash from the minimal amount to a maximum amount, 96% of UK population are still touching cash at some point with different frequency. So even if we think our clients and our end users are digitally enabled, are digital advocates, they're still touching analog money. And it's about, if you're into that digital space, how do we encourage people through? But then there are whole sectors of the UK population, by geography, by socioeconomic class, by whatever, are stuck in that cash loop, that analog cash loop. And we need to think about how our solutions really empower these people to move forward in a digital environment. So I've talked about the 3 points on the screen are the 3 recommendations that the Royal Society of Arts came up with in a recent review they did. I've talked about how you keep cash infrastructure viable. That's going through legislation. I've talked about how you avoid that cash desert in terms of those that need cash. But also, it's all very well having a tenner in your pocket. If you can't spend it when you go to a shop, if acceptance is an issue, then actually that whole loop of analog money is an issue. So there are some fantastic opportunities going out at the moment in terms of the use of using cash with QR codes and converting that physical cash to an electronic payment. And I've mentioned about supporting people with digital transition. The link will be in the notes to this, but it was really interesting. We all say, well, of course, during pandemic, during everything, we all adopted new digital stuff. We did things differently. MasterCard did a review, I think it's 35,000 people, and they looked at they reviewed that, they spoke to the people about, are you making direct bank to account payments? Are you using open banking initiated payments? Are you using BNPL? What about crypto and QR? And as you might expect, the propensity of folk to use those sort of things during the course of a year was quite high. They looked back and it was 83% in terms of, yes, I've used those in a year. But even within those people, 93% said, I'm going to do more in the next year. When you get the notes for this and you get the link, drop it down and look at this report. It's about a 5-minute read. 4 or 5 key insights that are really helpful as we start to think about digital payments and where payments ought to go. And you quite naturally talk about convenience, flexibility and control. The interesting for me one here is when they talk about security, the interest rates are lower. The amount that people are bothered about security is quite low. I thought that must be an anomaly, that can't be right. But of course I've now found 2 or 3 other points where in fact people don't care about security until it goes wrong. And how we get that message over around making sure that our products and our propositions and digital payments are absolutely secure and can be trusted on just as much as that tenner in my pocket is vitally important. Later on today, Peter will be talking from Answer Pay around Request to Pay. I'm not here to talk about Request to Pay in my talk to you, but one of the things that we'll see in the future of payments is the choice will be in the hands of the consumer, the end user, the person actually making the payment from their bank account. And it's all very well, if you look back to payments in the past, it's pretty much get what you take. You want a Sky, you want an O2 phone, you have to have direct debit, you have to let me dip into your bank account and take the money out every month. We're seeing the choice within payments about how you pay, when you pay, and who you pay being absolutely vital in terms of success of fintech, in terms of the success of future payments. People want that, and they want to be empowered, they want to be in control, they want the convenience of payments. There are attributes on this screen that Peter will be talking about in the context of Request to Pay later that actually transcend that payment product, but also others as well. We have to get in a mindset that the end user is expecting a lot more choice, but a lot more control. Another theme that we're going to see in payments in the coming years is this real issue around fraud. Now, whether you call it APP fraud, whether you call it CEO fraud, whatever fraud you call it, it's still fraud. And there's a fraudster who's benefited from that with their pina colada in Malaga, really enjoying themselves. And the poor person in the UK is the one that's trying to rectify their account and got the stress. The thing that we're seeing in terms of that payment certainty is around being sure who you pay. So as you're thinking about your payments products, as you're thinking about your propositions, how can you be absolutely sure that when someone initiates a payment through your platform, that they would definitely reach the person they expect to reach? And we thwart the fraudster. Because if you go to the UK Finance website, and the stats are a little bit out of date, I keep waiting for the next set of stats. Whatever stats you look at from UK Finance, those numbers are eye-watering. It is embarrassing that as a payments industry, we're allowing so much fraud to happen. And we've seen that as we went into digital payments, particularly with faster payments, where faster payments initially meant faster fraud. And we've seen some of that close down, but we're seeing more and more sophistication in terms of the fraudster. It's eye-watering and it's embarrassing. I'm a great advocate of confirmation of payee. It's not perfect, it's not a silver bullet, but frankly, when I'm making payments, I feel much more confident now that it's going to end up at the right place. And I also know that if it doesn't, and I've had a positive response back from my bank, I've got more of a case when I go and challenge the money that may have gone wrong. So confirmation of pay is not a silver bullet, it's not the only solution, but it is a great example of how we can start putting stuff at the front end and dealing with fraud before it happens, rather than trying to deal with the fact the fraudster's on the beach and I'm trying to get my account rectified and I've got all the stress, the hassle, and the banks pay up. Because whatever you think of banks, I say this as an ex-banker, they're not charities. They're here to make money, and they cannot keep repaying this money. So just as it's incumbent upon them to sort themselves out in terms of fraud, we as part of those payment chains need to think about how we can be absolutely certain that people are sure who they're paying when they're making a payment through our platforms. So payment certainty is important. I know we've got the PSR up here earlier on. I'm looking for a PSR person. I can't. Oh, there we go. And we've got the PSR talking a little bit later around some of those works. There's a consultation going on presently. It closes in a couple of weeks around confirmation of pay and extending the reach to about another 450 institutions. If you're interested in that space or involved in that space, you must go to the PSR's website and look at that consultation and influence in that. I'm very much of the view, and I comment on this quite a lot, and I blog about this quite a lot, about safer payments need service ubiquity. We need to make sure that we have the protection of payments when they go through, that we're sure who we pay. And I put the slide at the bottom as a timeline. I was with Vine, an account-to-account open banking firm, on Monday, and I felt, to be honest, very old in the room. There were a lot of very young, very, very clever people, and they were incredulous about how long things take to happen. And I have to say, I sounded a bit like an old person and a bit like an advocate for time. I certainly wasn't. But as you talk to about the speed of some things that are happening in our industry, it's absolutely amazing. We need to see that trickle down to addressing fraud and being certain about who we pay. So support the confirmation of pay response from the PSR. Get involved. If you're part of that chain, why wouldn't you cover your customers with that benefit of confirmation of payee? Now, we talk about the future of payments, and here I'm talking about a direct debit product that is 50 odd years old. Now, there's some debate about whether direct debit was released in 1968, 69 or 71. If you're a purist, it's 71. If you want to make it older, then it sounds like it was 68. But I brought direct debit to the table today for two things. One, because I still think there's life in the old dog yet. And secondly, it has a lot to teach us as we think about the future of payments and what people are looking for. So direct debit is absolutely embedded into the way we work, the way corporates work, the way billers work, but the way we pay for the goods and services we consume. 92% of bill payers use direct debit for a regular payment or more. We have a number in our accounts. I spoke to some of my ex-colleagues, some of my friends over at pay.uk, and they've shared with me three things from a piece of research they've done. This isn't public until today. They've allowed me to share this with you today, and they're going to be using it going forward. But they did some research around people who make regular payments. And for me, both in terms of direct debit and the future of payments, it told me some things. It probably told me the thing I knew, but 74% said they want to automate their payments rather than making payments and dealing with things individually. You know, we're all time poor, whatever we're doing. And as we think about whether it's direct debit and our use of direct debit, particularly other payment types going forward, it's how we automate our payments, how we make it easy for the people to make the payments, that they spend less time panicking, worrying and playing around with their bank account, that we make their life a better place. And by doing that, we make people sticky. But when you spoke to the people, when Pay.uk spoke to these people around words they associate with direct debit, they talked about easy to use and convenience and reliability. They are, to some extent, motherhood and apple pie. But if you're involved in payments and you're involved in new generation of payments, how well do your propositions stack against some of those criteria? Because almost every adult in the land is using direct debit, and they associate that product with those sort of attributes. The interesting thing, as I said about the MasterCard work, is that about the security, in Pay.uk survey, 66% said direct debit is secure. And yet you let people come into your bank account as often as they want and take the money out with a guarantee that sits behind it. We need to think through this security thing, because folk are only happy until it goes wrong. The scores fared well in terms of other payment types, and that's sort of an aside for Pay.uk. But from my point of view, we've got a situation with direct debit where I'll talk about the future of direct debit in a moment, but it has a lot to tell us about how we make digital payments successful in the future. There'll be a link, you won't read this, I suppose you might, on the side there, but you'll see this in the notes that come out. I've just done some work with Access Pay Suite around how the effect of inflation, what the effect inflation will have on subscriptions and subscription payments. You could probably extend that also to any form of reoccurring payments. And as we go into a particular economic downturn, what's going to happen first as we tighten our belts? Those discretionary purchases around reoccurring payments, the Netflix, the Sky, the mobile phone, whatever is going to be narrowed down and used. So there's some work. You'll see the link as the notes come out there's a whole thing there about if you're involved in reoccurring payments at whatever level and however you take the money, some of the things you can do around adding value, being flexible in terms of the payments, communicating well with your clients. So there is a particular juncture here if you're involved in any payment product that has a discretionary element. If you don't get those attributes right and treat the end user well, as that belt gets tightened, you will see the attrition in those customers. But of course, there are many new ways to pay coming along down the track, and Peter will be talking about request to pay later on. I'm not going to go into that, but what that does is turns direct debit on its head. Instead of me coming in and drawing money from your account, I ask you if you'll make this payment, you'll pay this payment. You're putting control into the end users. I've spoken to the guys at Vine Payments the other day talking about account-to-account payments. Would not have happened without this, what I call a fairly recent, in banking terms, launch of faster payments, but 2008 sounded like a dinosaur to a lot of people in the room with me on Monday. But without having a near real-time or a real-time, depending on how you look at faster payment solution, account-to-account payments are using open banking initiated payments would not be possible. We've got that fantastic bedrock of faster payments, but actually starting to exploit how you use open banking to leverage those account-to-account payments is really important. As we go through into the summer, we'll see the CMA 9 mandated banks launch variable recurring payments for sweeping, me-to-me payments, the ability dynamically to cover my short position at one bank account with a long position, another account, avoid overdraft fees. You know, we're going to see that roll out. The real challenge or the real opportunity comes as that transcends and changes into a more commercial variable recurring payments situation. You start to be able to offer people paying recurring payments, saying, well, you can come into my account, but only for up to a tenner. You can come into my account, but don't come in for 11 times because at 10 I'm cutting you off. You can come in at this frequency. It puts that control. Now, how we don't make that too complex and difficult for the average person to run, well, I'll leave that for the people that come up with the solutions. But we start to move variable recurring payments from me-to-me payments to a more subscription-based, a more reoccurring, a more paying for things. And it might start to address some of those things about, buy now, pay later in some of the installments. I've seen some great VRP ideas around buying festival tickets. You buy it over time, but of course the festival ticket's not released until the end. So you haven't released the good or service, but you've paid in manageable chunks. There's no scheme around this. There's no commercials around it. There's no framework around it yet. We'll see that coming in a few months. There's a few people out there playing at the edge, but watch out for variable recurring payments. I've talked about installments and subscriptions. I'd also pick up, as we come out of post-subscription, thinking about micropayments. Now, people have been involved in micropayments for a long time, have never really got this together, in my view. We invented the internet, we chucked everything on the internet, we said, come and take our goods and read our stuff and have it for free. And we created this free model. We then realized that wasn't commercially viable, so we had to put things behind paywalls. So we put things behind paywalls. For a chunk of money you can consume, you can eat as much as you want. Of course, that's fine if I want to eat as much as I want, but if I just want a prawn cracker, it's quite expensive. We've got to get to the point where we can sell through micropayments biteable chunks of information, biteable chunks of access to something. And I think we'll see if we can do that in an economic way, we'll see open a whole new way of making payments. And I finish, I can see the typo hasn't been corrected on the bottom right. So when I say pool, I mean a different sort of pool. But I really think we're on the cusp. And I'd really advocate the cusp of direct debit, what I call direct debit 3.0. And the point about direct debit 3.0 is saying that, as individuals, we're paying for more things regularly. We're paying for things, on a reoccurring basis, everything. Actually, sometimes this works, sometimes that works. Direct debit has a particular clearing cycle. It has a particular proposition, has a particular liability model. We need to bring that up into the current decade. But as we do that, why don't we put in variable recurring payments into that direct debit sandwich? And as part of that, have some of those attributes of VRPs within the concept of direct debit today. While we're at it, why don't we bring request to pay in there as well and actually have a schema in the UK that would lead the world in terms of offering people the ability to pay in a way that works for them in a very efficient way. So watch out for direct debit 3.0. We've got some folks from open banking sharing with us later. I'm not going to go into open banking. I've talked about the significant impact it's already had. We've done the aggregation, we've got the nice charts, we've got the data, we're doing some account initiation payments. I particularly like that. I think it's fantastic. Look what EcoSpend have done. We're also thinking about variable recurring payments and using those things. We're going from that point where we end up from open banking to open finance to open data. And I've just stolen this slide, top left from OBIE, so congrats to those guys for getting up to 6 million active users. But the other two slides are from Tink. And for me, it's all about that bottom right-hand bullet point. We will know when open banking and open finance and open data is truly delivering what we need or benefits to the UK population, when not only has competition arisen and competition being driven, but we are seeing tailored financial solutions and we are improving the overall financial health of the UK population. At that point, we will know that we've been an absolute success in what we call today open banking, because instead of me getting a vaguely appropriate proposition from my bank or from a PSP or somebody to offer me money at a certain rate, or to provide me a proposition based on where I live or anything like that, if I'm getting a tailored proposition to me, a tailored thing that works based on my data points, or based on my actual history, I'm getting it that's appropriate for me, and it will improve my financial health. For me, numbers are great. For me, different solutions are great. But until we start really proving that we're making a difference to people's financial health, and we're making a difference to people's receipt of tailored information, that's when we'll see the success. Just as I finish, I just wanted to give you a challenge. Do you know what? I struggle to find out how you spell czar. It seems an English and American, so I don't know whether you work English or American. But if you look up the definition of the czar, it's a high-profile appointment of somebody who devotes their skills to one particular area. I'll give you 2 challenges today if you're involved in payments and in the payment space. The first is I won't encourage you to get your phone out now, but look at your phone. Look at those financial apps on your phone. I need another financial app, like need another TV streaming app, another car parking app, another music app, or another sat-nav app on my phone. We've got to think about, if we're going to live in an aggregated world, if we're going to empower the end user, if we're going to really allow people to make payments the way they want to pay, if we want to put them in control, how do we present that out without a proliferation of apps on our phone that are a very disjointed way? And secondly, I think I'm fairly technically advanced. I've been digital for a long time in every aspect of my life, and that includes money. But do you know brain fog when I sit in front of or stand in front of a parking machine? Whoever designed these things needs to be put in the tower. But I would suggest to you that every time you look at one of those, and I use Ringo actually, if I'm honest, but sometimes you can't, you've got to do these things with a tap and pay and a card. But when you face that car parking machine, just think about the embodiment of friction that you are facing. They are an absolute nightmare. They're badly lit, they're badly designed, they're badly angled in terms of doing what you need to do. They are just so complicated, it is untrue, with number plates and all the rest of it. They are an embodiment of friction. Don't assume that banking and payments are immune from that friction. And just every time you stand in front of that parking machine, just use that as a prompt to you. If I'm involved in payments, if I'm involved in fintech, if I'm involved in the future of people managing their money and paying people, how do I make sure that I don't create that absolute piece of friction that either turns them off or puts them to a competitor, or just makes things go wrong? So think about proliferation, think about the friction of the car parking machine, and put those into practice. Just as I close, I said I'd offer you a piece of digital swag that was worth the value of your conference ticket today. I publish a newsletter called Payments Unpacked. Julian mentioned it. I know there's a couple other readers in the room. There is a free version, but there's also a paid-for version. For putting up today, you can have 12 months subscription to my newsletter. It's worth 50 quid, which is what you paid to come along today. So take away a piece of digital swag that I think will be far more useful to you than a conference umbrella, a pencil, or a notepad to take home and either leave in a cupboard or give to the kids. So subscribe today, and I'll update you for 12 months, and hopefully I can share with you some insights on payments over the coming year. Peter told me the QR code would work, but I put a bigger one there just to make sure. So thank you so much for your time today. I'll hand back to Julian. I really appreciate it. It'd be great to catch up with you during the breaks, but I appreciate your time. Thank you.
Thanks for kicking us off. I think, for me that was everything I hoped it would be when we invited you to do the opening session. We asked you to set the scene and sort of plant the threads for the rest of the day. So you've covered so much ground. We're going to get into those topics. Does anybody want to ask Mike a question before we move the agenda on? Kind of, we can take advantage of having him with us today. So one of my you've got one. Yeah, go on. Yeah.
Some of the research you mentioned, I think it's an interesting contrast of people saying they they like direct debit convenience. No, sorry, yeah, I'm probably all right, I think. Convenience, you're not going to do anything. And then request to pay and others require that intervention from customers. And so it's also kind of your thoughts on actually, is it a solution for a problem that's not there? In the sense of, I know people like control, but do you want all the right? Will you pay us this month? Will you pay us this month?
Look, I'm an advocate of direct debit. It's from my view, it's 50 not out, and there is certainly life in the old dog lit. The reason I say that is I ran direct debit for a dozen years. I took it up to 4.5 billion transactions direct debit a year, massive penetration across the UK, delivering all benefits and salary. I mean, it just, but sorry, that's credit. But in terms of direct debit, people paying for stuff, but built it up to 4.5 billion transactions. So I'm a massive advocate. But the thing I would say in response to your question is that there are different sorts of payments that you as an individual make. So sometimes a direct debit would actually work for you. You're absolutely happy to pay it through a mortgage, pay for your council tax, something like that. But actually, if you're buying a discretionary purchase like a Netflix subscription or like a bit of airtime on an iPad, you might not be so comfortable with paying with a direct debit. You might want to have that bit more control. So I would say that so sometimes the types of payments you're making are different. And I think sometimes people are different. Sometimes people just don't trust direct debit and they want other options. Some people are in a financial cash flow that they can't risk a direct debit because there's not much money in their account and therefore fall short on their account and pay overdraft fees. So I think there's an opportunity for them to coexist. And I think it's around different people, different solutions, different scenarios. I think the mix is probably a bit wider as well. I think it's probably direct debit, variable recurring payments, and request to pay. And if you put that together, and when I say direct debit, I mean tomorrow's direct debit, not today's. You put that together, and it is a great set of solutions for different people in different ways that get away from an analog cash. They get away from the cost and the friction and the risk around card payments. So I think that the answer is probably a mix, and depending on the type of payment.
Thank you for that question. Anybody else want to ask Mike a question? But I'm going to squeeze one in, and then we'll move on. We're a little fluid with some of our timings today, but I always feel we've got a speaker. We need to take advantage of having their knowledge at the front of the room. You talked about fraud and different types of fraud and the challenges that we face in the financial sector, and I guess that goes right across all the developments in payments. I heard it said at a conference I was at recently that we're fighting a losing battle against fraud, and that if anything, we're getting further away. The fraudsters are getting further ahead of us. How do you feel about that balance? Because obviously we've got lots of new technology and sort of security protocols that are available to us. Can we close the gap? Are we closing the gap? Do you agree with that?
I'll salute anybody that does anything to thwart the fraudster. The idea these guys are making money out of very vulnerable people and sitting on beaches in Marbella with their pina colada does not equate well. I salute anybody particularly that tries to tackle fraud before it has happened. Dealing with stuff post-event is sort of okay. My account sorted out in the end, but the pain and the stress I've gone through is a pretty nightmare. So I'm pretty keen that folk do stuff at the beginning. I mentioned confirmation of payee. There's some as being not a silver bullet, but a great solution. But in the open banking world, there are so many things going on around the use of data points and probability analysis and dealing with using analytics, AI and ML in terms of working out what's going in flight and helping the person receiving the money decide whether they apply that money to that account. And of course, if they get that wrong and you miss your house purchase or lose your car, you're pretty annoyed. But actually, if it thwarts somebody taking away the money. So I'd salute anyone doing anything. Pre-event, not post-event, is my thing. In terms of your question, do you know what? 10, 15 years ago, a bit more, we'd have been talking about check fraud. Then we were talking about card not present, and then we were worried about contactless pay. Fraudsters, they don't really care, to be frank. They're just going to go for the next weak spot. So, they go for a weak spot. And I talked about, faster payments can mean faster fraud. All fraudsters are doing is getting our next point of vulnerability, and this is where it's at. So that's why we need to address it. Will the fraudsters go away? Of course they won't. They've just gone to the next point of vulnerability. So, it's a bit like squash the rat, squash the mole, whatever it is at the fairground. We've got to bang this one, and then we've got to sort the next one out. But we won't ever stop it. What we've got to do is to make sure that we make life as difficult as possible for the fraudster.
Thank you. Right, James has got his hand. We're just going to do one, Dave. Sorry, because just keep things.
I don't think you have so many questions so early in the morning. So
you get like at the coffee break. So
I don't think I need this one. Just linked onto that fraud piece. We, at my business, a business I work for, we do quite a lot in the gaming industry to prevent problem gamblers betting. And the big change in the ability to stop and prevent them logging on to UK gambling sites came through legislation. So it'd be really interesting to see, do you think financial services needs legislation to ahead of the transaction for fraud, or do you think it would be better served leaving it to the firms and businesses to work out?
I think my answer would be the latter, not the former. You know, if I'm taking hits on my business because I'm paying out on fraud and I've got to reimburse folk, I need to be, that should just be the thing I do to try and stop that. So I would absolutely expect anyone in that payment chain to be so serious about sorting fraud, they get on with it. I sort of say that and think, well, then why haven't we seen a faster rollout of confirmation to pay and stuff like that? And I know there are lots of dynamics here, but at the end of the day, if I'm going to serve my customer well, then I should be trying to thwart it, and it should be my commercial imperative to do so. I do know, and I'm not an advocate of regulators stepping in and making the industry do stuff. I've been at the sharp end of that, having to do stuff because the regulators told me to do it. What I do know, though, is that the industry doesn't get itself together. Our good friends from the PSR will stand up and make people do it. And so much better that as an industry, we do all we can to thwart fraudster without the need for regulatory intervention. But if we don't, it'll come.
Awesome, right. Thanks. We'll stop there. Mike, you're
Cool.
around if anyone wants
I'm
to
around all
talk
day.
to you.
Pleasure. Thank you very much for your time this morning. Thank you.
Following on from Mike's excellent introduction, we're really pleased to have David Beardmore with us today from OBIE. And David's going to give us an update on how we're doing in terms of the progression of open banking. And that's going to then lead into a panel. The panel's going to be chaired by Helen from Open Banking Excellence, who's braved the traffic and come on, all sorts of problems you've had this morning. But a relief to see you walk in the room, Helen. Thanks. David, come and take over.
Well, good morning, everybody. And first of all, thanks, Mike. I thought that was a fantastic overview and introduction. A lot of points that you bring up, I'm going to take, well, some of them, the open banking ones, I'm going to pick up. Delighted to be speaking in the north, the wrong side of the Pennines, but in the north, which is great. I just thought I'd start the War of the Roses again, just to get a little bit of animation going. I'm also delighted that open banking is high up on the agenda of this conference. I think it is one of the hot topics at the moment, and I'm delighted that we've got an opportunity to talk about that. I've only got a short period of time, so I've just got three key messages. So the Open Banking Implementation Entity, the snappy title of the OBIE, the regulator, effectively, the body there to implement open banking into the UK. I've got three points or three messages that I want to bring this morning. The first is that open banking is working, and I'll talk a little bit about some evidence around that. But secondly, that open banking isn't finished yet. We get asked this quite a lot, is it done yet? And I strongly argue that it's not. And my third point is that open banking has demonstrated that it is a great starting point for a future destination, a better destination. And kudos to Mike for pointing that out. It is exactly that, moving from open banking to open finance to open whatever, open future, open X, open whatever, or maybe smart data if you're a government regulator. So let's look at the first point. First of all, open banking is working. The regulations that set open banking into motion came into play in January 2018. So we took the rules around the Second Payment Service Directive, around PSD2, and specifically the element in PSD2 that gives consumers the right of access to data about their current account or about their accounts. But then we built around that, in contrast to what happened in mainland Europe, we built around that then the regulations around the UK's open banking approach. So that built in then a common standard, a monitoring function, but also, again, as Mike highlighted, that it mandated the nine not actually the 9 largest banks, but the 9 banks that between them had the largest market share across consumer and small business accounts. So those are the CMA 9, as you often refer to them. So we started January 18 with just 9 banks, 9 ASPSPs, regulated, mandated, required to operate the standard and so on. And we've gone from there, and I often like to update these stats. So we now have 91 ASPSPs, so 91 banks providing account data, and we have 249 fintechs, TPPs, third-party providers, live to market, regulated by the FCA, sitting on the directory, consuming the data that the 91 ASPSPs are making available. Sitting behind that, then, there are another 350, 400 entities in our sandbox who are, as you would expect, testing out propositions. Some of those will go live to market, some will not. That's the purpose of the sandbox, is to test it out. So that's the sort of state of activity in terms of participants. In terms of activity, it is a constant month-on-month growth of activity. And you may have seen on LinkedIn that I put out stats every month, but I was particularly excited this month to announce that we got over the threshold of 1 billion API calls in the month. Now, I'm not a technologist, and I don't get too excited about API calls, because embedded in there are fintechs, there are TPPs, or technical service providers particularly, who are polling the banks, to check connections and things like that. So it's not an entirely accurate number. But the fact for me that it is continually rising month after month after month and passes the 1 billion threshold, I'm pretty happy with. So that was good. But the most important one for me, so my title is Ecosystem Development Director. The stat that I'm most bothered about is the number of end users, because that is a choice that has been made by consumers and SMEs. And that, again, we passed another threshold. So we were at 5 million at the beginning of the year, January, February time, and then this last month in May's management information that we get from the CMA9, we passed the 6 million, so we're at 6.1 million, which is absolutely tremendous. The other thing I should say, whenever you see those stats that we chuck out around API calls or PSUs and numbers, end user numbers and so on, it only refers to the information that we are required to receive from the CMA9. Now, obviously, there are plenty of other ASPSPs, plenty of other banks that sit outside of the 9 that have end users that are not counted in that 6.1. So we're pretty confident from the work that we've done that we think there is approximately another 500,000 or so on top of the 6.1 million that we've just reported, if you look at Tesco and Amex and any other ASPSP that's in there. So open banking is working. I think that's I would hope, not in dispute. I would also hope that not in dispute is my second point, that open banking isn't finished yet. We often get asked this question, as I said in my intro, have we done yet? The CMA9 ask it pretty much every day, have they done yet? Mainly because they're paying for it and they want to stop paying for it. So as soon as we can demonstrate that it's complete, they would be very happy indeed. So the way that we are governed is that there is a roadmap, which is literally a list of deliverables of things that are required of us to go and make happen. And we are very close to the completion of that roadmap. In fact, there's only one thing that's left outstanding on there, and again, thanks to Mike, he brought it up, and that is VRPs for sweeping, variable recurring payments, but for sweeping, for me-to-me accounts. So that will happen during this year. So there is a managed rollout that is happening right now. So we have 3 of the CMA9 that are actively involved in setting up the VRP for sweeping APIs, making those endpoints exposed. We have a handful of TPPs who are testing those API endpoints and effectively going through this managed rollout that will end in the next couple of months. And at that point, then you will see, I would hope, all of the CMA9 step up, expose the API endpoints, plus a number of other ASPSPs and a lot more TPPs who we know have got propositions in place. What I would say, and I would echo Mike's point again, is that the only thing that is mandated in the open banking roadmap is VRP for sweeping. That's a very limited use of variable recurring payments. That doesn't include the examples like setting up a subscription for your Netflix. It's a me-to-me account, so it's taking it out of my current account at the end of the month where I have an excess and putting it into a savings account. Or it's pulling it from a savings account and dropping it into a current account in order to avoid overdraft fees and those kinds of things. It's the me-to-me part. The next bit, which the banks are keen and are working at and are developing propositions, is indeed the commercial application of VRPs, and I do believe that you'll see that take off. So the 6 million users I'm excited about, but is it finished yet? No. If I look at something like contactless, where according to various different stats, somewhere between 75 and 85% of the population regularly use contactless. We're at about 10%. Our 6 million out of the 53-ish million digitally active accounts, according to the CMA, puts us around sort of 9-10%. It's good, but I'm not satisfied. I certainly want more, and I think we will see more. My target is to see about 7.5 million PSUs, active users, by the end of this year. So come back to me and see if that has happened. Now, one of the things that my team, so we are the sort of outward-facing part of the OBIE, one of the things that we are looking at specifically around account-to-account payments, open banking payments, is how we can encourage other sectors to embed account-to-account payments in what they're doing. So many of you will have seen the tremendous statistics from HMRC following on from the appointment of EcoSpend, the TPP that set that into motion. But that was a great example of not me, but some of the guys in my team. I can remember about 18 months ago running workshops at HMRC and really doing the sort of open banking 101. What is open banking? Going right back to the very beginnings and taking some very, very simple, noddy questions around open banking. And yet within a matter of months, credit to Nick Downs and the team there, have gone to the point of not even understanding what open banking is, to the point now where more than 6.5 billion £6.5 billion, sorry, not 6.5 billion payments, 6.5 billion pounds of tax payments have been delivered via open banking payments, via account to account, or pay by bank transfer, is what it says actually on the HMRC app. But what we're also doing now is working with other sectors like transport, with utilities, and charities, to try to take the general benefits of open banking and apply them specifically to the challenges of those particular sectors. And that, I'm hoping, you will see come to life very soon. Now, the final point that I made was that open banking has been a great starting point. Yes, I'm really excited, but our mandate is only for open banking. It's only for current accounts, and it's very clear. And we get into trouble, as some of you in the room know, if we dare to tread outside of the CMA 9, outside of current accounts, and dare to look at anything else. We get jumped on very quickly by some of the 9. But my argument is that we set this up, the framework, the trust framework, the directory, was set up, designed to be extensible. It wasn't designed only to deliver open banking, current accounts open banking. It was designed to make it extensible for other sectors. I often get asked to speak about what's going on open banking around the world, and there isn't time to look into that right now. But the one country that I would draw your attention to and their application of open banking is Australia, via their CDR, Consumer Data Right legislation. And the great thing there is so Scott Farrell, a lovely gentleman who authored the Australian government's approach to open banking, didn't start with the premise of how we can shake up retail banking. That was not their agenda. The agenda of the Australian government and the CDR panel was how can you give Australian citizens the rights of access over data about all of their lives, and how can you put them in control and allow them to use it, to share it with who they want it to be shared with. And they began with retail banking, and then the moment that was done, he then moved on to utilities and is now looking at healthcare and telco and other sectors and so on. I think that is a really, really strong approach. One of the things we often get asked are, what are the mistakes that we made, or what would you do differently? And the one thing I would do differently if I'd been in charge of the open banking regulations is I would have had much more of a CDR type approach, that we wouldn't have just had that narrow focus on open banking. Because the challenge that we've got right now, and we've got Andrew from the PSR here is well aware of what's going on with JROC and all of the regulatory stuff, it's a challenge now getting us from this narrow confines of current accounts to just to get it to open finance, let alone to smart data and open everything. But that's one of the things that I would have loved to have done. I talked about the trust framework. So the directory is the trust framework. It's regulated by the FCA, or the actors, the players are FCA regulated. They sit in our directory, and it's the means by which we can share data between regulated, authorized parties. But the point we keep making over and over again to the regulators, particularly in this time of flux right now, is, as I say, that the platform is able to be extended to other platforms. So whilst we have roles in the directory that are driven by PSD2, so we have ASPSP, we have AIS third-party provider, PIS third-party providers, and those are all defined by PSD2. We could just as easily scrap those roles and replace it with energy provider, energy aggregator, energy user, and regulate it all by Ofgem. And it would work in exactly the same way. So that is our argument that we should do that. We've actually already done something very similar to this, slightly outside of PSD2. So those of you that are familiar in the banking and in the banking world will know that the Crown dependencies of Jersey, Guernsey, and Isle of Man falls outside of the remit of PSD2. But what we have done is replicated the Open Banking Directory and all the roles that sit in the PSD2 environment, replicated it on the side, kept it exactly the same, but put then non-PSD2 roles in there in order that many of the banks, many of the CMA 9 banks that have operations in the Channel Islands can operate in that same way. So we've demonstrated already that it can be done. Final point is that you mentioned, I think Mike was saying, he kept using the fraudsters sitting on a beach in Marbella. A few of you here, I think, were fortunate that the Open Banking World Congress was in Marbella, and we were sitting in a beach. But I promise you, we weren't all fraudsters. But the beauty of that, I was very fortunate to chair a couple of sessions there, and it's still. I find heartwarming and amazing that we meet delegates from Canada, from New Zealand, from the Middle East, from all around the world that come up to thank us on behalf of the UK for setting the standard and setting the agenda on open banking and helping pave the way for other jurisdictions. I passionately believe that we are in first place, and I want to maintain that. But Brazil and Australia particularly are snapping our heels and moving at a much faster pace than we are. I can't and don't want to get into the whole sort of jurisdiction around governance and what's happening with the JROC. I'll leave Andrew to wade into that one so I don't get into trouble. But what I would plea for the regulators is to move quickly in that. We're coming to the end of the CMA's influence, the competition remedy. We know from government announcements of the JROC, the Joint Regulatory Oversight Committee, so that's the FCA, PSR, Treasury, BEIS, that we're pointing towards smart data. And everybody that we talk to at the Open Banking World Congress from outside of the UK saying, you are the obvious body to make it happen. Please carry on and do it. Continue to pave the way and push for it. My plea is that there are regulators who, apologies Andrew, are not normally known for moving quickly and incisively. I hope that they will do, not only set the future direction, but actually set a little bit more of clarity of how we're going to get there. So in conclusion, I just want to thank Julian and the team again for including open banking in the agenda and the panel that I'm really looking forward to being part of now. So I hope that you'll hear that I've hopefully explained to you that open banking is working. The 6 million consumers choosing to use that, making a choice to connect their bank account in order to take advantage of it. That it isn't finished yet, that there's lots more that we can do even within the open banking space and certainly beyond that. But also that what we've built in open banking is the ideal foundation to grow it into open finance and eventually into smart data, which will benefit all of the population, not just in financial matters, but across the board. I don't know if there's time to take any questions, but thank you for the opportunity.
You go straight into your panel, I think.
Thank you, David. That was great. Yeah, we don't do questions after David's talks because David's going to now join the panel. I'd like to invite Helen to come and take over from me here, and we've got Kerry from Swoop and Andrew from the PSR, but I'm going to let Helen do the introductions.
Good morning, everybody. Excuse me. Well, first of all, before I introduce myself, let me just say thank you to Julian and the team for putting on this event in the North. For those of you that don't know me, my name's Helen Child. I live on the beautiful Morecambe Bay. So I wake up every morning, I look at Morecambe Bay, and this morning when I left at just before 6, and the sea was coming in and the sun was rising over Coniston, Helval and Striding Edge. So I am very blessed to do my job and work where I live. Slightly ironic that I have given the team a slight flutter, that what is normally door to door from my house to Harvey Nicks I can do in an hour, took me 2.5 hours today. So apologies, and I've left my car in Palace Street car park and there's literally a fire alarm and smoke belching out of it. So we will see if I've got a car. So maybe I'll need a hike home. Anyway, my name's Helen. I'm the founder of Open Banking Excellence. We are a global community of fintechs, banks, regulators, policymakers and service providers around the world. We started off as 38 fintechs in a room. And somebody asked me to get up and speak, and And there was from those 38 fintechs, everybody said, let's do this again. Way back in the day. We are now a community, a global community of over 17,000, which is absolutely phenomenal. And it goes to the work that David and his team have been doing at OBIE. I have a very privileged position in the industry. I've just come back from Saudi, if you look on my LinkedIn, and I'm part of the team advising SAMA, that's a Saudi Arabia Monetary Authority. Some of my team are helping Saudi Arabia launch open banking. We have our open banking familia in Brazil. And that is because, like David, I am very, very proud to fly the flag. Open banking was born in the UK. I do a lot of work for the DIT. I'm a DIT Fintech champion. It really was born in the UK. And we have a lot of work now to do to make sure that we retain that lead. Okay, so we will be talking about that. But that's enough about me. I would like now I really just wanted to say a big thank you to Julie and the team, and apologies, I caused them a little stress this morning. Ironically, because I live so close. I'd like the team to say hello and a few words about where they're from and what they do. So ladies first, please, Kerry.
Hi everyone, I'm Kerry Dwyer, I'm from Swoop Funding. I'm originally from Ireland and kind of made my way over to London with Swoop. So our two founders are both Irish, and as is half the company as a result. We are a fintech that essentially enables businesses to get funding a little bit easier, and we kind of hold founders' hands in that process. And a lot of it is around kind of demystifying this whole world of open banking and the fintech space.
And I'm looking forward to hearing a lot more and learning a lot more too, Kerry. Andrew.
Sorry.
For those of you that I've not met, my name's Andrew Self. I come from the Payment Systems Regulator. I think most of you will know who we are, but we're the economic regulator for payment systems. I'm a senior policy manager there, and I look over our work on open banking, cash, and non-crypto digital.
I think you know me, I'm David from the OBIE, there we go.
And doesn't it say something, David, that you have the keynote to kick off things talking about open banking? Seriously, 3 years ago, that would have just been a dream for us all. So thank you again to Fintech North and well played. Okay, so if Andrew keeps them, if we jump straight in now, actually, and we start talking about it, something that David talked in his keynote around, is open banking a success? Kerry, let's hear from you. Is it a success?
Just keep remembering to pass the mic.
It's okay, it's a good game, it's a party game. We can all join in.
Yeah. So I think kind of what David and Mike were chatting about in both of their talks are very relevant to this question. And I think the fact that we're all sitting here in a room discussing open banking kind of says it all. There's the whole ecosystem built around it with fintechs like Swoop. So yes, absolutely, definitely is a success. I think there's a long way to go, as David also touched on, and I think kind of a measure of success for open banking is that user rate, and how do you measure that? So compared to contactless payments, as David mentioned, 10% is pretty impressive, but we've a long way to go, and I think other countries copying the UK, essentially, like countries like Mexico and Canada, and also it moving into other industries, shows that we're kind of really moving forward, but I suppose we can't slow the momentum, kind of need to keep going.
So what you're saying, Kerry, it's a bit like sort of Carol Dweck in the growth mindset. We're not there yet. It's always going to be work in progress. Yeah. Andrew, would you agree? Open banking, is it a success?
Yeah, I think so. So I think that given the role we do, we talk to politicians and government quite a lot, and the current government love to talk about world-beating, world-leading, right? But genuinely, when you look at what's being going on in open banking, it fits that phrase that's used for pretty much everything that the current government are doing. But I do believe that what is happening here is world leading. I think when you look at the use cases that have come forward, where there's genuinely a quite easy commercial win, you are seeing use cases come forward, and you're seeing some of the benefits, some of the tangible benefits of open banking coming through right now. If you go on Just Giving, you can just pay by bank and reduce a lot of the fees that come with that. So we're already starting to see those kind of like those tangible benefits of open banking. The other one I would touch on is fraud. You spoke on it in your talk, David. open banking allows banks to talk to one another, which gives us this huge ability to reduce the fraud that we're seeing through authorised push payments. And that with the development of confirmation of pay and seeing really significant milestones being achieved through that, again, I think is showing that open banking today is doing some really good stuff. But there are challenges ahead, and I know we're going to come and we're definitely going to talk about the challenges and how we solve them. But how you really harness open banking to see a structural change in UK payments is sort of it's a big question. But there's a really solid base to be building on.
And do you think it will? Do you think that's what will happen? It will be part of that structural change?
I mean, it's central to the PSR strategy.
It is.
So hopefully, I mean, that's what we want to see happen.
And we're going to touch on that a lot more. David, open banking, is it a success?
Yeah, I mean, I think, as you say, you can tell from my notes earlier, yes, it's like, as Kerry said, it's yes, it is, but there's more to do. I think, just to pick up on a point Andrew made, at the UK Fintech Week in London, John Glenn, Economic Secretary, the Treasury, the second main point after the crypto point he made, the second point of success and applause, if you like, was the delivery of open banking, not only as a value to the UK economy, but as part of UK PLC, as something that's worth exporting and shouting about internationally. So I think yes, it's a success, but there's more to do.
Sorry,
please.
I was just going to add on the HMRC point in terms of reducing fraud. I think there's really impressive stats as well around the idea of kind of this fat finger thing, and people aren't making mistakes with a number on their bank account, and there's huge savings there for HMRC with customers using open banking as a result.
Can I just one funny point about that is EcoSpend, the TPP that I mentioned that run that service, all their staff had to go on some training on a sort of customer service training on how to deal with consumers who had made their tax payment via open banking payments and it had gone wrong, and how they would fix it and what remedial steps they would take and what the escalations would be and all that. It's hilarious because there hasn't been a single case, not a single case, out of £6 billion of tax paid, not a single case has gone to that internal sort of mechanism for disputes, and not a single payment has gone into a suspense account where, you know, that, as you say, the fat finger where you've got to type in the 16-digit UTR and you mistype it. So you say, I'm David Beardmore, but I type in Kerry's UTR by mistake or something, and once that happens, it sits in a suspense account waiting for it to be resolved. To get it resolved requires HMRC then to pay people to manually intervene and fix it. It also means that while it's in a suspense account, it can't be being used to sort out the health service or whatever. So it's there's these intangible benefits as well that perhaps aren't as obvious, but really important. Great point.
So in David's keynote before, he talked about some numbers, and OBIE should be immensely proud of those transaction volume numbers and the end users. But the last time I spoke to HMRC about the numbers, I actually had a call with them on the way down, but when I was talking about the numbers, so these might be slightly dated, it was £5.2 billion collected by open banking. So I'm curious, who in the room paid their tax online this year? It's all via open banking. I wonder who in the room that paid their tax knew it was by open banking. Okay, cool. So the number Kerry was talking about, reconciliation, they have saved 20 million, okay, and this on reconciliation. So that in terms of, this is an MVP. Remember this. They are still sort of testing it, and when it's released to everybody what they are doing next, and that again will affect us all, it is phenomenal, and they are leading the way, and they are really shining the light on how open banking will save money for UK PLC. So when I'm talking around the world, everybody wants to know about HMRC. Everybody, David, wants to know about COP. Everybody wants to know about VRP. And I sometimes wonder if we realise how many regulators, policymakers around the world are actually looking at what we're doing. We should be immensely proud. And on a personal note, OBE is run from the north of England, so that's we should be doubly proud. Okay, so let's move on. So I want to get onto this. So is the market confidence, and I think the key word is confidence, supporting open banking becoming a mainstream payment? Now, David talked about the trust framework. We all know that open banking is about secure, me giving consent, a secure consent for a third party to access my data. It's democratizing data within that trust framework. David, is there confidence there for it to become mainstream?
Yeah, I mean, clearly I would say yes, and I would say the uptake of users. So, things like TPPs enrolling or banks enrolling, you could be cynical and say they're doing it for other reasons. But an end user that makes that choice does it out of choice and sees some reason for doing it. So I think, yes, it is happening. I think there's a sort of allied question, which is, and you touched on it about did you know it was open banking when you were paying your tax? Is that my mother has got no idea what open banking is. I've tried to explain it to her on a number of occasions. But if she were paying a tax online, she sees something that says pay by bank transfer. I said, well, you can either put your credit card in there, or you can allow that if you trust them to take the money directly from your account. And she said, well, I trust Amazon. Why wouldn't I just do that? I said, oh, perfect, good. We're getting somewhere. And there's that understanding of the consumer understanding. I think open banking has been a dreadful label. If you want my personal opinion, I remember when I was at the Open Data Institute before I joined OBIE, and we were leading on a lot of the original work around the open banking working group. I was very fortunate. On January 2018, I was on the BBC Breakfast News talking about the launch of this, and about 2 days later, there was one of those Mr. Angry letters that landed in my in tray at the ODI, and it was, how dare you raid my account without my knowledge and take all, and it just completely got the wrong end of the stick. Missed all of the consent points and all this kind of stuff. But it did typify the feedback that you get from polls and surveys and around the label of open. A friend of mine said, open and banking are two words that shouldn't be in the same sentence. That they imply the wrong things. The banks have been for years saying, look after your bank, don't share your credentials, don't share your password. And then suddenly along comes open banking, open everything up. And it just seemed to be totally contradictory. So I don't think we've done a great job in terms of the marketing of it. Falls outside of our remit. But is the market confidence there? Yes, I believe it is.
It was to open up the market, and open banking, just a bit of inside, a little bit of industry secret here. Open banking was a working title, okay, literally the working title, right at the very beginning, wasn't it? Mm. And nobody thought to change the name. It is that simple. It was, happened by default. Okay?
And and Santander actually own the phrase open banking and allow us to use it.
There you go. Okay.
Inside
Andrew, confidence, taking it mainstream, is a bedrock part of your policy. Talk to us about what we need to do.
So, just to reflect on what David said there, I think we need to not forget how difficult it is to change consumer behaviour. I think that a lot of people here can be like, open banking can do some great stuff. It's really exciting. Consumers, you know what? Cards work really well. And we need to remember that to get consumer uptake will genuinely be quite a significant challenge here if we want to see some of the changes that we're hoping to see through open banking. I'm sure most of you at least skimmed our strategy. And in that strategy, we put trying to make open banking and account-to-account transactions work in a retail setting right up there as one of our 4 priority areas. There's lots of very good reasons for that, but probably the key one is that this is genuinely an opportunity to see some structural change in how the payment system, how payments work in the UK. Open banking presents an opportunity to provide a competitive constraint on some of those other payment systems, not least the card schemes. Important to note, as I've already alluded to, cards do a really good job. As a regulator, we're certainly not anti-cards, but what we are really keen to do is see open banking come forward as a genuine competitor in this space. We've listened quite a lot over the last 6 months, and we've had a lot of just conversations about what industry think need to happen in open banking. And there's 4 things that come across really clearly if you want to make it work in a retail setting. Functionality. How do you actually get this to work when you get to a retail point, be it online or in shop? The resilience of the underpinning APIs and making sure that when you go into a shop or you click go on your online transaction, that it's going to go through as close to 100% of the time as possible. Dispute resolution and consumer protection. Now, we've said quite a few things publicly about consumer protection. We don't necessarily need to see a chargeback style consumer protection in place, but you do need to see consumer protection that reflects the risks of the transactions that are being taken. And lastly, there is that elephant in the room of a viable commercial model for retail transactions that works for parties in the market, but also gets you those structural changes that we want to see. And that will be a big challenge going forwards. Now, what are we as a regulator doing to start having the conversation about these issues? Well, the joint regulatory statement that we made with the FCA, CMA and Treasury, it was back in March now, I couldn't believe it when I looked at that, set out basically the next steps for open banking regulation. And what's really interesting is when I have a conversation with people, I think there's two things in there that some people have missed. Number one is JROC is there to set out the strategic vision for the next phase of open banking beyond the CMA order. JROC is about working out what this looks like next. The other point that I don't think people have noted too significantly is Treasury have stood behind this. And it says very clearly that should regulators need more powers to make this happen, they stand ready to legislate. That's really powerful. So we've got a commitment from regulators to work with industry to set out the vision, and we've got Treasury there saying that we'll back up this with legislation. And we've also got the Economic Secretary to the Treasury banging a drum telling us to move as quickly as possible. So there's a lot that needs to happen, but there's been some positive moves in terms of the regulatory space. I should probably stop there.
No, keep going. It's all great stuff. I want just Kerry to talk about open banking payments becoming mainstream, and then Andrew, I really want to unpack just a lot of what you said, including telling everybody about JROC and swag. We like it. We like the jargon at open banking. Kerry, open banking payments. Is the market confident enough yet for them to become mainstream? I'm curious.
Yeah, so I think I'm just going to keep coming back to this HMRC point. I feel like HMRC kind of trailblazing this is really putting some trust into the system. But I think everything that we're kind of discussing now, and as the guys were speaking, the whole thing I'm thinking of from a fintech perspective and kind of being the intermediary between regulators and the consumer is kind of around this whole trust piece. So are users willing to kind of trust open banking and the tech around it? And I think a lot of what it comes back to again is, having that end users, their best interest in mind. And I think on the trust point at Swoop, kind of half of what we do is, case studies and say to someone, if you integrate your bank, now this is more embedded finance, but on the open banking point, what we can do for you. And a really good example is we had a client recently who went to his mainstream bank, high street bank, couldn't get a loan, integrated his open banking with Swoop, and from there we could see that he was making monthly transactions to Poland for his tech team. And every month he was therefore making FX transactions, so there was £25 cost there, but he also wasn't getting the most attractive rate. So we were able to tell him, okay, you need to improve that, and we could see all of this from his open banking. We saved him £7,000. He was therefore able to get a loan from an alternative lender, so we helped him get funding and we also saved him money. And I think, again, coming back to the trust point, it's showing these case studies and showing users and particularly business owners, they're all the jargon around it, it's kind of just explaining it and showing them the benefit, and I think then it will become more mainstream. And again, sorry I'm going on a rant here, but it comes back to the contactless payment. When we all started using contactless originally, I remember my mum saying, don't use your contactless, people are going around tapping your phone in your pocket, and now 75% of people are using it. So it's that whole trust and use cases, I think.
Never need to apologise for being passionate. And you have to remember, we're only at year 3, okay? And, Andrew talked about cards, the card industry. I ran I built a card issuing bank, again, in the north. And we were the first to be issued licenses by both MasterCard and Visa. And that was more decades ago than I would care to remember. So we are in open banking still at year 3. And I think what we have done is to be the world leader and the first. It's just amazing to have covered so much ground. And yes, of course, there's lessons learned. Yeah? And that's, but we are now at a place to be very adult and talk about those lessons learned and talk about what we need to do next, which is a lovely segue, Andrew, to have a deep dive. It's an absolute privilege, having run a regulated business, to have, and also to try and kill myself here, to actually, I always hold the regulator with a certain amount of reverence, okay? So I really want to hear from you now and give you acres of space to talk about what more needs to be done. So it's your time to inform the market what we need to do, and if we can talk about, you've covered on a couple of these points, about developing a sustainable commercial model, okay? And then we'll get that far, and then I want to talk about JROC, okay? So over to you.
So I've sort of covered at a really high level the things that we think need to happen to make this to allow account to account to work in a retail setting. I sort of alluded to it the answer to the last question, that the commercial model is a bit of an elephant in the room. At the moment, we have a world where sending firms, ASPSPs, are effectively operating at a loss to provide a service to somebody else to make some money. And that is not necessarily the most comfortable place for them to be, and is unlikely to work in the very long term. We also have a world where there is no reason why commercialization of non-order activities can't be happening today. And we're seeing some of that, right? So we've got the NatWest and TrueLayer contracts. We're seeing some things come forward, but it's definitely not going at sort of rocket speed. And what we are very keen to do is start to have a more open conversation with people in industry as to what that commercial model actually needs to look like. So we've been doing a lot of work internally, thinking about, well, what do you actually want to achieve with a commercial model? And in one sense, it's really easy. In one sense, you want a commercial model where parties can cover their costs, and then you've got competition happening in the right areas, which allow good, innovative companies to make money, but also compete against one another to make sure you get the right outcomes for consumers and merchants, and hopefully better services and cheaper prices. But that gets you so far, and then you need to work out what that looks like in real life. So who should be paying? There's an obvious answer of PISPs, but that might not be the right answer. What types of charges are we talking about? Are we talking about charges that simply cover cost, or are we talking about charges that incentivize take-up? There's some really big questions that need to be answered. It's probably worth just covering JROC and the...
But before we do, seriously, I think the point there is that just to sort of consolidate that point is we are at a very adult place, aren't we? That we can have, the regulator's got a mic in his hand and is saying that we want, a sustainable commercial model, that he wants it to be equitable and fair for everybody in the value chain. That's an adult conversation to have. It really, really is. And it's the right conversation to have. So, hats off for you listening, and hats off to you actually going into the market and having that conversation. And it is the right time to be having that conversation. I think what we'll see is the market will consolidate a lot because the model's not right. And that is a function of it us being 3 years old. It happened in the industry that I built. It happened in the prepaid industry. And we will see it again. So there will be some change. And out of that will come some of the answers. So, well done you. So going on to J-Rock, can we start by what is J-Rock? Yeah. Sounds like a rock band.
It's good. It's a good question. I have to say, I'm not a big acronym lover, but J-Rock I do think is good. And if you do search for J-Rock, I think you will find a rapper. So it's clearly going down the right road.
David's Weekend.
Yeah, something like that.
J-Rock is a turn of phrase for effectively a transient period of regulation. So J-Rock is bringing together the key authorities in payments to make some decisions to get stuff moving quite quickly, to make sure that OBIE to make sure that OBIE, the future entity and the future oversight of open banking, gets decided quickly so we can start moving into that space. There is a very strong desire of quite a lot of the parties involved in this to get to the point where order activities are done, BAU, move to that world where the future entity has a stable funding base. It's not necessarily the same as the commercial model questions we're talking about, but that's a really important stage. And as we move towards that stage where there is a future entity that is properly funded and has very clear goals and outcomes, plus a clear vision for how we go from where we are today to open finance that works. So I care a lot about the payments elements of that, but I will talk to the FCA and they will tell me that what they really want to see happen is proper open finance. And I thought when Mike was talking earlier, there is so much that you can get from that. In terms of timeline,
I'm curious, and just to stick here for a moment. So you talked about capital requirements. Okay, that really nicely sort of loops back into what we were saying about trust, the market having trust and confidence. And capital requirements we work in a regulated environment. That has its roots in the card industry, doesn't it? So that again is the right type of conversation to be having, isn't it? Yeah, it truly is, because Is there anything else that you want to say on that, and when J-Rock will be reporting back, please?
So we as a group of organisations are due to publish something shortly, as in the next couple of weeks, that will set out this in quite a lot of detail. So I've read, the letters are all ready to go. That will set out what our next steps are and how we're tackling these things in order. To give you a bit of a preview, we've basically given ourselves 6 months to work together and step through the long list of questions that are in that joint statement that we published back in March. And that's because we do want to move quickly. We want to make sure that sort of by the end of the year, early next year, we do have a clear, well, this is what we think the future entity needs to look like. This is what we think the regulations need to look like to cover that. And that's when once you get to that point where there is a clear strategic vision at the end of the year, we can start to move towards changing legislation if that needs to happen. And that's why that Treasury commitment is so important, that's there, because it may well be that whatever that future entity looks like, that you need to think about what the regulations are. We will be wanting industry views as we go through that process. So please keep an eye out on PSR and other regulatory authorities' sites, because we want to move at pace. That is going to mean that where we want input, we're going to try and do it in a less formal way. We want quick input so we can make decisions quickly and move things forward as quickly as we can. And you'll hopefully start to see us as the payment systems regulator engaging in a bit of a different way as well. So Stephen, who sat here, is currently busy working away at how we can get better input into that difficult question on the commercial model. But hopefully you'll start to see easier touch points to us as we start to answer those difficult questions as we go through the next 6 months.
Thank you very much. David, do you have anything to comment on there?
No. I mean, we clearly welcome the declaration of moving at pace. It's absolutely required. A couple of points on that. One is around regulation. I think Mike might have mentioned it earlier on about generally none of us is particularly in favour of having regulation to force something to happen. If we can do it through market mechanisms, generally that is the best way. There are some clear exceptions to that. There are some things, for example, a basic bank account on which a bank loses money on it, but for societal reasons we deem that it's a good thing to do. So a regulation has to come in place and say thou shalt do it, even though you might lose money on it. Well, I mentioned the Crown Dependencies opportunity that we've developed, which is a non-order thing, but interestingly, because it was driven by two of the CMA9 banks, they gave it its blessing. So as vested interests sometimes work. But what is interesting there is that unlike the PSD2 environment that we have, which is regulatory and is authorised and directed, in the Channel Islands and Isle of Man operation, it's all voluntary. So what we have there is a whole load of unilateral agreements between an individual bank and a TPP. So for those fintechs in the room here, if you were sitting in Jersey or Guernsey or whatever doing what you're doing, unlike the current OBIE mechanism where there's a common standard that says if I build to this recipe, I know it will work, and you don't need to worry about how Barclays does it or Lloyds does it or HSBC does it. In the Channel Islands, you do have to worry about it. You have to go and sit with each of the banks, and they are CMA 9 banks like Lloyds and RBS and others, but they're also Deutsche Bank and other banks. So you have then to go and have those unilateral discussions with them because it's not governed by PSD2. There is no scheme that says this is how it works. And the interesting thing is just how difficult and slow it is. And so we've now got some of the banks that have funded the operation out there saying, why aren't there more fintechs? Come on, you wanted this. Why aren't you there? And the answer from the fintechs is saying, it's bloody difficult. It's so time consuming sitting with each one of them, and each one of them presents data in a different way. We're actually wondering whether it's worth it. Are the benefits there in view of all the hassle that we will have? So whilst I'm not advocating normally for regulation, I do think on these things, if we want to make it happen, then it's needed.
I'm a great advocate of regulation. So what I want to do is hear from Kelly. Kerry, sorry, you've been quite quiet, okay, and I think you've got two chatterboxes sat next to you, so and very knowledgeable. They have a huge amount of expertise to share. So I want to move at pace now, to use Andrew's phrase, and to ask you to open with our final question. What impact will the evolution of open finance have on the payments industry? So it's now talking about open finance, which David touched on in his opening address.
Yeah, and I think that's kind of where the fintechs come in a little bit more as well, and goes back to the point of being able to show actions from information provided through open banking, which kind of is more the open finance thing. So I think kind of that also then leads to the smart data conversation and kind of chatting about how data becomes currency in a sense. And I think open finance is going to, open banking has quite a narrow focus, whereas I think open finance is going to open a lot more opportunities. We were speaking to fintechs last night that are helping people with managing their subscriptions, and that's all done through open banking and the data that comes from that. And peer-to-peer lending, the whole market there just opens so much. So I think on a consumer end, kind of open banking leading to open finance is going to give consumers just a way broader scope of experience and offerings.
So following sort of what they're doing in Brazil, they're now and what they're doing, as David was saying, in Australia, consumer data rights. Lousy Aussie accent there. Andrew, open finance. Talk to us a little bit about open finance and the impact it's going to have on the market, please.
I mean, it could be totally transformative, right? Like I mean, and I really like the picture earlier where you layer the far bigger open data question on top of open finance. Like the consumer experience could be huge. Who needs a mortgage broker when you can just plop your information in and you'll find out genuinely what products work for you and what's available? Like, that could be ginormous just from a consumer experience perspective. But then what about the applications to some of our like really basic things? Like when we compare flights today, you go onto Skyscanner and you find out what the cheapest flight is and you go with it. Open finance could make that possible for all other financial products. Like the idea is an absolutely fantastic one. It's not going to be easy to make work. I think I alluded to this earlier, and I think we've already spoken about it. The term open data is going to be quite difficult with people because they don't like sharing their data. When you explain to customers what it actually means, which is, you know what, there's secure routes where different firms that are regulated can actually share this information, you start to have an easier conversation with customers. Yeah. But I think it could be transformative, but I think there are big challenges in terms of getting customers to actually want to use it. My background, sorry, I will say one more thing and then stop talking. My background is in energy, and it's quite interesting that when people talk about smart data, they often point in finance, they often point to energy and go, you know what, smart meters came in and everyone loves being able to share that information. As somebody that worked in energy, customers do not like that information. Whatever you think the data is, however unpersonal you think it is, people will look at it and go, no, this is my information. And with energy, it's to do with, well, then somebody might know when I'm in or when I'm out or what my usual pattern is. And they worry about that. And when it comes to their finances, they're going to worry about it even more. I think that is a really big challenge going forwards.
I think a funny example actually to compare that to as well is, I heard someone saying this recently, when you go onto Google Maps, you know, even me trying to get here this morning from my hotel, I'm more than happy to put in my data and tell Google where I am. But when you say it as open banking, I think consumers go, why would I give you my data? But when you think of it as a fair transfer of value, I'm using Google to tell me how to get there. I'm more than happy to pay with my data. So I think kind of looking at it like that as well is kind of an interesting.
Can I finish on an optimistic?
And I would love you just to wrap it up.
Let me finish on an optimistic note. I've been a Nottingham Forest season ticket holder for years and years and years, so I know I am the embodiment of optimism. So my positive note is almost sort of taking out of the nitty-gritty and the weeds of regulations and these things and looking at a sort of philosophical point. I think we will look back in 10, 15 years time and see that this really is a significant period of systemic change. I'm not a payments expert, so I bow to Mike and others and their experience. But you know, there are things that have happened over in payments where that structurally it hasn't changed. We might have speeded things up. So something that used to take a fortnight might now take a day, you know, but it's still running on the same rails. We've just made it through computers and other things. We've made it more speedy and more accurate, whatever. But I think in what we're doing, particularly in the account-to-account payment space, as an option, I think is a systemic change. I think it's a new thing. And I think our children and our grandchildren, when they grow up, will just accept that it's perfect. You know, I buy something online and they pull the money straight from my account. Why would you do anything else? What do you mean? You have a card with all these intermediaries, and they each sort of add a little bit of time and take a bit of the cost out of that. Why would you do a thing like that? But I understand why we do, because we understand the history of how it came about. But I generally do think that this is a radical time of transformation, and I for one, am hugely excited. Yes, I have some challenges with some of the regulatory stuff as I tried not to let slip, but I am hugely optimistic that looking back, we will see that this has been a absolutely transformative period, particularly in finance, and I hope, as Andrew quite rightly says, much more than that out into the whole of society and benefits people's lives across all the sectors that they operate in.
And you said you'd wrap up with an optimistic note, and we are all living through a revolution and a transformational change. So, David, that is hugely optimistic. Ladies and gentlemen, I would like you to put your hands together. You have been listening to three amazing experts sharing their insight. Please thank David, Andrew, and Kerry.